themes relating to financial literacy is information. We really need good information. And so when we think about our plans, our future, what we need to be balancing is our needs against the resources that we have available. So the first step is to differentiate between needs and wants. Right? Now, for older folk who've had teenage children, we understand want, and want now is a general view on life. And I suppose, having bought a car last week, there was a certain degree of impulse buying for myself as well. Now we need to really think, do we actually need it or do we want it? And if we're very much a want-driven person, then impulse buying is likely to use a lot of resources. Right? An example might be, I need a cup of coffee. I say, not that I need a cup of coffee, I just want a cup of coffee. So I go down to the cafe and I get a cup of coffee and I have a muffin to go with it, and that's $10 gone. Now if I do that 5 days a week, that's $50. Now multiply that over a year and you've got $22,200. Thank goodness for 4 weeks annual leave, I saved $200. So needs and wants. Financial literacy wants to focus on needs, and then we want to know, can we finance it? So a budget is a good approach, and a budget starts with the obvious, the income. Okay. Now what are these sources of income? It could be part-time work, it could be salary, it could be dividends from shareholdings, it could be interest from a bank account. So we can list our sources of income. The next line, or the next set, is saving. How much do we want to save? That has to be a target. Now you may say, right, at this time I can't save anything. So we'll put 0 in. And the next time we revisit that budget, we ask the question, can we save anything? And if we go through the whole of life without ever saving, it's going to be a very uncomfortable retirement. So income, saving, and then our expenses. Expenses will be mortgage, rent, power, petrol, insurance, rates, clothing, cosmetics, haircut, dentist, doctor's appointments, and so on. So we list all the items on which we need to spend money. And when we fill in the numbers, month by month, going across our table, if you're into computers, do it on an Excel spreadsheet. But we fill in the numbers, and if at the bottom, income sources, less our savings target, less our expenses, is a negative number, then we've got a problem. Then we have to borrow. That's when our credit card doesn't get paid off. So what we're looking for is income minus expenses and making an amount available for savings coming to 0 month by month by month.